Let's talk about a company in the defense sector that if you're an investor, you just can't ignore right now, Elbit Systems. This Israeli tech firm has been putting up some truly eye-popping numbers. We're going to break down what's driving this incredible performance and, just as importantly, the very unique risks that come along for the ride.
All right, let's just start with a number, a huge one, $23.8 billion. So what is that? That's Elbit's record-breaking order backlog as of the middle of 2025. For an investor, a backlog like this is basically gold. It's a massive pipeline of guaranteed future revenue, giving the company a kind of stability and predictability that is just incredibly valuable.
And it's not just about the future. What's happening right now is just as wild. Plus 55%. That was Elbit's year-over-year earnings growth in Q2 2025. Now, in an industry that's usually known for slow, steady, single-digit growth, that is an absolutely explosive number. So the big question is, what in the world is fueling this engine? Well, to get that answer, we first have to get a handle on who Elbit really is. We're talking about a global high-tech company, but more than that, it is Israel's largest and, you could argue, most critical defense contractor. So here's the quick snapshot. A market cap floating around $22.6 billion, about 20,000 people on the payroll worldwide. But the line that really matters on this slide, the one you have to pay attention to, is that last one. Its core identity is being the #1 tech supplier to the Israel Defense Forces, the IDF. That relationship is the absolute bedrock of this company. And as we're about to see, it's both its greatest superpower and its biggest vulnerability. Okay, so let's pop the hood and really look at what's driving those incredible numbers we started with. It really all boils down to one very powerful, very unique competitive advantage. First off, a big part of Elbit's strength is its diversity. You can see from this chart, it's not just a one-trick pony. The revenue is spread out pretty nicely across aerospace, land systems, they have a huge US subsidiary, plus all the advanced electronics and cyber stuff. From an investment standpoint, that's exactly what you want to see. It spreads the risk across the entire defense landscape. But here it is. This is the real secret sauce. The company's single biggest selling point is this idea of being battle-proven. Think about it. Because Elbit works hand in glove with the IDF, its technology gets used, tested, and perfected in actual combat scenarios. Now, if you're a foreign government looking to buy a drone system, what's more convincing? A fancy brochure or a product that has already proven itself under the most extreme conditions? It's the ultimate seal of approval. And this chart just shows you the direct impact of that relationship in stark terms. Look at this. After the conflict began in late 2023, the chunk of Elbit's revenue coming from Israel itself skyrocketed from 20% all the way up to 34% in under 2 years. Now, operationally, that's fantastic, right? It drives huge orders and validates the tech. But if you're looking at this as an investor, a little red flag should be going up. This is classic customer concentration risk. What happens to that explosive growth when things eventually, inevitably, cool down at home? And that leads us straight into the central paradox of this company. Because the very thing that makes its product so desirable around the world is also the source of its biggest headaches. So on one side of the coin, you get these massive wins. Here's a perfect example, a $1.6 billion deal with a European country in August of 2025. This is the battle-proven advantage paying off in spades. But on the other side of that exact same coin, you get this. Just a few months before that big win, the UK government pulled the plug on a £2.1 billion drone program with Elbit. And a major reason they cited? Constant disruptions at their UK factory caused by activists. This quote from the analysis just absolutely nails it. This paradox, where a key sales driver is also a primary source of risk, is a dynamic not faced by most of its Western competitors. That tension right there is what makes Elbit a totally unique animal in the defense world. And listen, these aren't just abstract what-if scenarios. These risks are real, and they are hitting the bottom line. We're talking about contract cancellations in multiple countries due to political pressure. Huge investment funds, like Norway's Sovereign Wealth Fund, HSBC, AXA, they've all divested. They've sold their shares. Those activist protests, they cause actual measurable production delays. And on top of all that, every single international sale depends on getting a green light from the Israeli government. Okay, so you've got this incredible growth story on one hand and this really unique, kind of thorny risk profile on the other. How does Wall Street make sense of that? How do they price this stock? Do you get a discount for the risk or a premium for the growth? Well, the data could not be clearer. It's a premium, a massive premium. Just look at this table. Elbit's price-to-earnings ratio is around 56. Its peers, giants like Northrop Grumman and General Dynamics, are sitting in the low 20s. It's not even close. The market is valuing Elbit more like a high-flying tech company than a traditional, slow and steady defense contractor.
So why on earth are investors willing to pay that much? The answer is simple. It's all about growth. Over the last 12 months, Elbit's revenue shot up over 21%. In that same time frame, a titan like Northrop Grumman actually saw its revenue shrink a little. You just don't find that kind of growth in this sector, and investors are willing to pay a hefty price to get a piece of it. So this brings us to the end where we tie all this together. It all comes down to one central dilemma, a core question that any potential investor in Elbit has to wrestle with. It's really that two-sided coin we've been talking about. On one side, you have this phenomenal growth story, powered by world-class technology that everyone wants because it's been tested in the real world. But on the other side, you have this set of very real, very material geopolitical risks that its American and European competitors, well, they just don't have to deal with. And that leaves us with the final question, the one you have to answer for yourself. Is that incredible, battle-proven growth story so compelling that it's worth paying that steep premium for the stock, while also taking on a whole set of risks that you won't find anywhere else in this industry? That right there is the multi-billion-dollar question at the heart of Elbit Systems.